Hello and welcome to this week's Market Focus Fundamentals on the 19th of December 2011. Well, after a very volatile year's trading, we're now coming to the end, and what's been an absolute erratic quarter, it certainly has had its ups and downs. And obviously, the big headlining news of the year has been the sovereign debt issues and the problems that have really enraptured Europe as a whole, the Eurozone. If it's not Greece, it's Italy, Portugal, Spain. I think you can just take your pick. Whichever country's been headed, there's always been a headline come a Monday morning or a weekend. Obviously, now measures have been sort of taking place, if you'd like to say that. European leaders have got round the negotiating table to talk about austerity and how really they'd like to progress with things. And companies like Standard & Poor's and Moody's will continue to downgrade European countries, as they have just done with Belgium. I think it was just on Friday when the markets close. So that's the sort of thing that's gonna happen, I think. But as the way how the markets have really behaved this year, I'd just like to show you really just a quick a graphic of just how some of the world indices have really fared. There's only a few weeks left in 2011. And if you look at the year-to-year gain, the S&P, which was fractionally positive a few weeks ago, is still the best year-to-date performer, with off around about 1.6%, with the FTSE a distant second with minus 6.28. Other markets are sporting double digits losses for the year. Obviously, the Germans, for obvious reasons. It seems like the burden of Europe's problems have been placed on Germany's shoulders. Hence, for that double digit decline in the DAX, Bourse, Nikkei, and the French CAC again. It seems the French and the Germans together combined, and question marks are still over France's economic situation, really, and that's another question for another day, as they say. And Hang Seng and Sensex obviously propping up that table. So it's been a pretty difficult year's trading, I think we can all agree. And really, I think in the coming weeks, whether we see a year-on rally to really bump some of these figures up, I know this is the 9th of December, is really anyone's guess, I think. How things really pan out. Obviously, as we get into December, volume will thin out quite considerably, and it's when volume does thin out, generally the markets can move a bit more sporadically. So keep your eyes out for some seriously strange moves in the coming weeks. But really, just to finish things off in this year, really, it's been one of the most volatile years I can remember as a trader to date. I mean, 2008, 2009 was just really a drop off the cliff. And although they were absolutely terrible, what happened with the economic meltdown with banks like Lehman Brothers, this year has had this erratic and volatility move up and down at some of the most ridiculous levels I've seen. It's really a case of having your eyes glued on the monitor 24/7 just to make sure you're not being stopped out of any position. So that's a sort of a touch-up on how we've really been this year, and it sort of just echoes the point where in the problems they've had in Europe. But, they've got round the negotiating table now. They're putting steps forward. Some might agree it's not enough, although Britain, we've had a step back. A lot of the burden will be going forward, and I'm assuming again into 2012, especially the start of 2012, a lot of these stories will still be here to fester in Europe, and some of this volatility, I'm sure, will continue in the start of the next quarter. I'm certain of that. If we just really go into the calendar for this week, really, we've got a pretty quiet start to the week. We've got the Italian trade balance, which weren't great this morning. It came up 0.0 It was expecting 0.97 billion, came out 1 billion. And we've got Drahi. He's an interesting fellow that's actually heading up the ECB bank now. He'll be speaking this afternoon. And if recent weeks are a case in point, whenever this gentleman does speak, it tends to put the market on edge, let's say. So it's interesting. It's going to be very important, especially around 3:30 time, just to be aware if you do have any positions running, just see what sort of stuff he comes out with. It's obviously with the sensitive subjects that are the Eurozone banks and Eurozone countries. They are having a profound effect on how some of these markets are feeling, and they are certainly feeling sensitive and nervous, one can say. Moving on to Tuesday, we've got the consumer confidence coming out of the UK, which is fairly in line. It'll be interesting how consumer confidence will be bearing really at the start of next year, with obviously now we're coming, as I mentioned last week, with some of the retailers are really hoping that we can have a sort of end of year boost to some of their sales. So nationwide consumer confidence, again, that's another one we're going to be looking out for. Again, slightly probably more on the offside. Out of Europe, trade balance and German producer prices index will be coming out on Tuesday, and consumer confidence as well out of Germany, and the IFO, which is a fairly key number actually, which the Germans, the European markets like to look at. Again, fairly in line. Moving on to Wednesday, we have the MPC minutes of the meeting. Again, it'll be interesting to see what, if anything, was discussed regards anything going forward as regards any more quantitative easing or any outlook really as regards interest rates, whether Britain really are going to be following Europe as such really. So, keep an eye out for that. That'll be in the morning. And out of Europe, we've got consumer confidence again. We're not looking for great figures here. We're looking for from a minus 12.2, maybe a slightly better minus 11. Existing home sales, always an interesting one out of the States. We're propping up the end of Wednesday. Thursday, Italian retail sales, well, less said about that, the better, I think, at the minute. Current account deficit for UK is out on a Thursday, and the GDP for the final quarter, expecting no change there. And final quarter GDPs also now for the US, again expecting no real change. And the central business leading index just to prop up that Thursday. And to finish the week off here, we have mortgage proposals from the UK, GDP from Canada, core durable goods, and some inflationary data out of the US. So some of this, we've got quite a bit of data. New home sales just to finish the week off at 3 o'clock, which is fairly key, expecting slightly better. So, obviously this week data's still coming in. We've got a full trading week as we're moving into Christmas week. As the days progress, trading will be thinning out, and you'll see potentially if any news does come out, you'll probably see a bit more movement than necessary. But really, I'd like just to leave you, and hopefully all of you have a great Christmas and a happy New Year for next year, and we'll see what 2012 brings. Thank you very much for listening. Bye bye.